Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us remotely is Tony Zhang. He's Chief Strategist with Options Play to review some strategies and give us an update on Nasdaq Nordics options. Tony, it's great to have you with us as always. And we've seen a lot of volatility come out of the market since we spoke in March, but still there's a little bit of time to go here before we get back to what our old normal was.
Yeah. So first of all, thank you so much for having me on. Absolutely. Volatility has calmed down a little, so things feel a little bit more stable. But today what we're here to do is try to provide investors a bit of understanding as to what our outlook is and where we're looking for opportunities in this market.
All right. And let's get to our next slide here with the current market outlook. And I guess the question is this a bear market rally, or have we bottomed and we're starting to look to the upside now?
Yeah, so this is the question that I think is on most investors' minds. So on the OMX S30, what we've seen is a pretty spectacular rally off that 1250 low that we put in mid-March, but it's stalled out a bit right here around that 1500 level. I was actually here, on a couple of weeks ago talking about that 1500 level as a resistance level where I would be looking for opportunities to potentially short. And looking at the momentum and how the price action has responded to that $1,500 level, I think that this is a good opportunity to potentially explore some short opportunities. This gives you a pretty good risk reward ratio because if the index does push back above 1500, you could take a pretty tight stop on that particular trade and get out and perhaps flip back to more of a bullish view and say that this is not a bear market rally. But at the moment, stalling at that 1500 level, my outlook is that I think that markets are going to at least head back down to that 1350, 1300 level.
Moving along to our next slide here, COVID-19 trends in Sweden had a very different approach compared to the rest of the world when it came to social distancing. And we're starting to see that in the numbers.
Exactly. So this is, the numbers in Sweden are still pretty small. So the sample sizes are hard to make extrapolations on, but they are currently still seeing the same type of projections as countries that have taken the different approach, but their numbers are a little higher. The rate of transmission, the number of deaths is a little higher than countries like Switzerland and Denmark, and in that area that have taken more draconian measures to lock down their citizens. And if we look at the rest of the world, what's interesting here is that we have Italy and Spain somewhat over the hump. But close behind it, you have Germany and France that are still trying to, reach their peak, if you will, and get over the hump. But the problem is that you have a whole slew of countries that are just behind Germany and France. So this is not going to end, relatively quickly, in my opinion. This is just going to continue rolling down the line for countries that are just simply behind the curve by a couple of weeks here. So those are some of the concerns that we have, and that's why I think everything in terms of the markets we see are more downside risks rather than opportunities to go long at this point.
Yeah, and we can see that on your next slide here when you look at economic impact. And I think the biggest variable out there is duration.
Absolutely. So, this is credit card data out of Bank of America. This is for the U.S. data, but I think we can make some of the extrapolations because many of these categories are very similar. But broad-based, we're seeing on the conservative end of the spectrum about a 30 to 40% decline in consumer spending. Some of the more aggressive numbers that we've seen are closer to 50%. So we're somewhere in that 40 to 50% range that we're seeing in terms of how consumers are reducing their spending. But there's a few specific categories that I want to pay attention to. So at the top, I don't think it's a surprise for anyone that travel, entertainment, restaurants are really the ones that have taken the largest hit. But some of the notable ones, clothing down 60, 70%. That's a pretty significant decline in spending in that specific category. Groceries up 20%. That's a pretty strong indication. Also, total online retail also 25%. So there's quite a few different I would say ends of the spectrum here in terms of where consumers are spending. And as they stop spending at restaurants, they're more likely to spend more at the grocery store. So there are some trends that provide some opportunities that I want to show everyone, some of the trades that I have set up here for the Nordic markets.
All right. And let's get right into that. The best part of the presentation, our next slide here, strategy focus on retail.
Yeah. So on the previous slide, as we saw, closing spend was down 60 to 70%. And I think that the markets have rallied quite a bit off of the lows. So in a stock like H&M, which is one of the most liquid stocks traded in the Nordics, also one of the largest clothing brands in the world, has rallied significantly off that 100 low. It's rallied up to about 136, and I think this is where a stock like this might stall out. It has pretty weak relative strength. It's in a very weak particular industry that is likely going to see a fairly prolonged slowdown in their revenue numbers. So basically, using this current market environment where volatility has decreased a little, but still remains fairly elevated, the strategy that we want to use here is selling a call credit spread. It's a fairly neutral to slightly bearish strategy. Basically, we're speculating that H&M doesn't move significantly higher from here. So we're selling the 135, 145 call spread. This is slightly in the money, but we're collecting almost half the width of the credit spread. And these are the types of credit spreads that we typically like to try to trade. And this strategy has a break-even price of almost 140. So as long as H&M stays below 140 before now and the May expiration date, we can be profitable on a trade like this. So this is really betting that retail has reached kind of a ceiling and is likely going to pull back a little going over the next few weeks and next few months.
All right, if we move along to our next slide with the strategy on grocery, without even looking at that based on your fundamental thesis, I would imagine you're looking at something bullish here.
Exactly. So as you can see this chart, it's sold off quite a bit along with the market, but has rallied above its 52-week high over the last couple of weeks. And this I think shows the strength of spending in the grocery space as consumers pull out of going to restaurants and bars, and they're cooking more at home, and they're buying groceries and perhaps stocking up for potential lockdown in Sweden if they choose to do that. I think this is a good bet on a stock that is one of the largest grocers in Stockholm. In this particular case, I'm also using a credit spread, but I'm using a put credit spread, which is the bullish credit spread. I'm selling the 200-210 put vertical, collecting about $3.40. Here, I'm only collecting about a third of the width, which is more in line with what we typically see on a credit spread. So this is what I would consider a very typical credit spread that you would sell, where I'm defending roughly a 205, 206 level, as long as the stock stays above that 205, 206, which was the previous 52-week high, where we believe that this stock will continue to be supported as coronavirus, continues to grow in the Swedish markets at the moment.
All right, and our final strategy here with the focus on pharmaceuticals.
Yeah, so AstraZeneca is one of the few pharmaceutical companies that have actually provided guidance. Most companies these days have been pulling their guidance, but AstraZeneca has provided guidance, which gives us a fair amount of clarity. And what they've shown us is how much of a decline they're expecting out of the coronavirus in terms of demand out of China, demand out of the rest of the world. So based on that guidance, we are fairly confident that AstraZeneca rallying up to that 900 level and then pulling back off of that 900 level is likely going to stay below 900. So same thing here. We're using a credit spread, again, selling the 870, 930 call vertical, collecting about 2,600 kronas on a 60 krona wide credit spread. So roughly almost a half, again, similar to the H&M trade here. And really, this is really one of the only environments where we're able to collect this type of premium due to the high implied volatility in the markets right now. So a very good example of how to utilize credit spreads during these types of elevated volatility environments.
All right, Tony, to wrap up with your last slide here, tell us more about Options Play Nordic.
Yeah, so this is a partnership that we entered with Nasdaq in late 2019. This gives access to everyone in the Nordic markets free access to the Options Play Nordic platform. You can access it at optionsplay.se. All of the screenshots I just showed you before of the 3 previous trades were taken using that tool. It allows you to scan for ideas, analyze an options trade, and see how they perform going forward. Really useful tool to help people understand how to analyze the trades. And also we provide weekly options education, cover call and short put reports to allow people to better understand how to implement option strategies for their portfolio.
All right, Tony, as always, appreciate the insight. Thanks so much for joining us.
Thank you so much for having me, and I hope everyone stays safe.
Okay, and thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.